Hey everyone, it's Rob Foglia and Jessica Klein with Foglia Properties with Keller Williams here in Nashville. And we're coming to you live today just with our Friday market update because we want to talk about how the rise in COVID cases, how that's going to affect the real estate market here long term, or what the effect could be. We just want to throw out there too, this is not like a political post or political video. So we're not trying to say like, hey, this is what we should be doing, what we shouldn't be doing. I know so many people have opinions out there about case reporting and all that. Like, we're not commenting on any of that. We really just want to bring up basically what this may look like for the real estate market, so that we can do our part to help educate our people, our clients, our friends, because ultimately, I think, and we'll get into what the long term may look like here in a second. I know there will be friends who are watching this video that may need to make a decision with their real estate in the next 12 months or the next couple of years even, and that they may look back on things saying, hey, I wish I would have known what Rob and Jessica were talking about back in June of 2020. And so that's why we're doing this, so we can help educate and help inform. Are we ready to jump in, Jessica?
Yeah, we're ready.
All right, cool. So before we even jump into stats, basically, the biggest thing that sparked kind of this conversation today was I saw an article that said, because we all know about phases in Tennessee of reopening with COVID, and there's been a lot of reporting about COVID cases on the rise recently. And while this is not Nashville, Shelby County, for those that don't know their counties, that's out in Memphis. And yet, they've made the decision to kind of hang tight in phase two. Just a couple of recent articles that we pulled up on Google to show that we're not just fabricating, or it's not just on some random site. It's on Fox 13 Memphis and Murfreesboro Post, posting these things about it. And we had yesterday, I was actually talking with colleagues that they thought that Nashville is actually still in phase two, or that was being pulled back to phase two, and I couldn't see anything verifying that. And so that's why we're kind of bringing up the Shelby County. What do you think this is all going to mean for us, Jessica?
That's a big question. um, well, you were talking about the phases and what Nashville's doing right now. I mean, we don't know. We're obviously not on these committees and boards and things who are making the decisions, and we know that right now we're in phase three, newly in phase three, and that's very exciting for a lot of businesses. We'll see really, what happens here in Nashville in terms of which phases we stay in. I know that, a quick Google search or even on weather.com, they show you the daily averages. And for now, it looks like we're seeing some slight increases in things. And so that's part of the reason that we wanted to bring all of this up today and talk about how it might impact real estate going forward. And I'm glad that you have this graph up right now, because this is, it's a little bit different than the graphs that we've looked at before. We've seen new listings, and those were 12-month rolling averages. This graph tells us a lot more about what we've been seeing in the last few months. And we're looking really good in terms of, you can almost see even three bumps here, like phase one, phase two, phase three, kind of, how that's impacting real estate. And that can help us forecast what happens if we do end up becoming a little more conservative in the future with phases.
Well, exactly, and that's well said, Jessica, because you're right. Normally, and we never like to try to tell the future when it comes
Right.
to real estate, because no one has a crystal ball.
Yeah,
I
risky
know that's
business.
Yeah, it is. I mean, there's no way that anybody can tell what a home is going to be worth in a couple of years, or what's going to happen in our economy in a few months. However, I mean, just like you said, the bumps, I think that's a good way to put it. So, like, just to kind of to show y'all what we mean by this is that very typically around March, April, May, we tend to see kind of a spike in homes for sale, a spike in maybe an inventory or new listing. Maybe that's the best way to put it. And that's what we're showing you right here. This was last year. This is 2019, and this is typical. And then, there may be a 1 or 2 months, around, I normally tell people around the 4th of July, we kind of see things slow, and that's what this is. Picks a little bit back up in the fall and then slows down in the holidays. Like, that's a very typical sales cycle for us here in Nashville. And so what we saw though this year was kind of strange. Again, we saw, again, a little aberration here month to month around the holidays. I'm not, it's the holidays. That is what
Yeah.
it is. But then we saw, a pretty normal rise. If you just look at the way they look between February and March of this year to last year, that's same thing. I mean, that's the exact same thing. Then we saw this drop off in April and then back up to what could be normal in May. Think about where we were though in April from a society, from a shutdown standpoint. I mean, that was the very beginning of quarantine. Well, I guess technically the middle of March was, but the beginning of everybody saying, "Hey, let's just kind of hang tight. Let's close businesses. Let's do,
Right.
X, Y, and Z to stop the spread, flatten the curve, whatever the buzzword that is that we wanted to use." And that's when we saw a drop off of new listings. We even, just to bring up pending sales here real quick, look at the drop off in pending sales too. I mean, again, follow the curves here that we typically see. Huge jump normally from February into March, a little bit into April and May, slows down a little bit, and around the summertime, then it climbs up a little bit again. Look at what it did this year. Again, that kind of like a black hole, so to speak, is what we called it in April, and you see the exact same thing, this dramatic spike down that you normally don't see. And again, we just want to point all this out because that could be what we're moving back into. I mean, if Memphis is staying in phase two, I mean, who's to say that they don't keep us, move us back to phase two? I mean, we'll see. We don't know. But if the rumors are already going around like that, and friends and people are talking about it, that's the case, well then, what's that going to mean for our real estate market? And that's kind of what we want to just dive into real quick. And I think it affects us in two ways. If we shut down again, if we end up, if this continues to be, if that's the trend, if this happens again, if just go back to new listings, if this happens again, to kind of throw the normal trend, I was about to point with my hand, that's how into this I am, this normal trend doesn't come back and it's more like this again, that slows us down, and it slows us down for a couple of reasons, and one of them is unemployment, and so just a quick search this morning. I won't bore you pulling it up again on Google, but a quick search this morning said when the last unemployment numbers hit at the beginning of June, we were still at 13.3% unemployment. And I know some of that could be temporary. There are a lot of articles about that, but think about the people who may have applied for temporary unemployment.
Yeah.
And the business that they worked for shut down. They no longer can go back to that business, or they no longer have the ability to go back to that job. If you're a homeowner and that's the case for you, could lead to you being almost forced to sell, a distressed sale. We've done some videos, go back and look on the topic of forbearance, but there's I think there's a lot that goes into that basically, and I don't know, I feel like I'm rambling here, Jessica.
Well, and I think you touched on a point there that's really important. A lot of these programs or delays or policies, whatever you want to call them, are coming to an end. So that the extra $600 a month for unemployed people, and unemployment has a time frame anyway, and then you're looking at the end of forbearance coming in a couple months, or sometimes some people this month, and then what's another thing? There are lots of these programs that were helping people. Eviction restrictions; those are lifting soon. So a lot of people were. What was that?
I'm sorry, I didn't mean to interrupt you, but they've lifted it in some counties already. Like I want to say in Clarksville, Montgomery County, like it's pretty. I heard from another investor anyway. I mean, it's hearsay. I haven't verified it. That they said there that they can already evict people. So
yeah. So there's so many things that there are quite a few people who have been sort of getting by with this help, and it's going to end. And there's got to be, I mean, we were talking about it a little bit earlier, and how, all of these things affect the real estate market. If people don't have money in their pocket, then, they could either be tapping into the equity in their home, they could need to, they could have been planning to buy a home and they can't do that anymore. Finances really affect what you can and can't do with property. And we're seeing, all of these policies had this stabilizing effect, and it's almost a false sense of security that it's giving us.
Well, and I think it's important too to bring up that real estate is kind of a lag measurement on the economy. And 100%. And what I mean by that, for anybody who hasn't heard that before, or doesn't know exactly what that means, is that typically real estate trends in terms of the market, when you start seeing downward trends, and I don't mean like just less listings, like this isn't the best visual for what we're talking about maybe right now, or at least for forecasting it, but when we're talking about like home prices declining, or being in it's been a very strong seller's market for the last few years, and for that changing, like that type of change is a lag measure, meaning it takes normally people 6+ months to really start to feel it, and then they start to say, all right, well, I need to sell, I'm in a distressed situation. It could be the forbearance that we've talked about. It could just be that they didn't even know about that, they didn't apply for it, and they've missed payments, and now they're all of a sudden being foreclosed on. I mean, who knows? There's a lot of different ways that pops up, and it's tough to think about the fact that roughly 1 out of 7, if that's the case, people are unemployed. That means probably 1 out of 7 homeowners, may not be quite that high, but 1 out of 7 homeowners could be struggling to make their payments. And
Right.
while housing is typically kind of the last payment that somebody will not make because they need a roof over their head, like that's kind of was it Maslow's hierarchy of needs? I can't remember where housing falls on the needs, and yet it's pretty substantial. I mean, after sustenance, basically, it's shelter is right there. And yet, at some point, it gets to the point where if all you can afford is sustenance, then you're in that position where you need to, you're in a distressed spot, is what I'm getting at. And long story short, again, I feel like I'm rambling with this a little bit, is that ultimately I believe that we will start seeing some distressed sales happen. It is what it is. There's no way around that. I mean, there'll be people who are forced to take action on their home. And the thing that probably plays into this the most is, let's just bring up months of supply. And let's go back, let's make it a 12, maybe a rolling 12-month average, and go back a little bit, to the max. Like, we've looked at this before, and, we've shown how, like, kind of where it ends up becoming a balanced market and a seller's market, et cetera. So if you're not sure exactly what we're meaning, go back and check out some of our old videos, or PM us. We're happy to talk with you, in private, and explain some of this. But what I'm getting at is, this has kind of artificially kept the market strong for the last few months.
Right.
If what we're going through as an economy was happening here, I think our real estate market would be hurting. It'd be hurting a lot. And if this changes, if we start to see a rise in inventory because of distressed sales, and there's not many non-distressed sales happening, then that's going to hurt values. I mean, there's just no way around that. If half the listings out there are distressed, or even a third of them or a quarter of them are distressed sales, meaning foreclosed on, they're a short sale, they're maybe a forbearance sale could be part of this over at some point. We'll see what happens, or or the result of a forbearance, I should say. That what we're gonna end up seeing is this could rise, and it's gonna ultimately affect. Where am I looking for here? I'm looking for sales price. Here we go. So what I was looking at, it's ultimately going to affect this. I mean, there's just no way around that.
Yeah, and I mean, the important thing here, that again, we're not here pretending like we can predict the future. If we could, that would be it would be amazing if we could, and we can't. So what we're doing here is giving you information so that you can hope for the best and plan for the worst.
Mm-hmm.
I think that that's always going to be our position here,
Mm-hmm.
giving you as much information as possible, and using our experience and information like this to say, okay, if this did go south, then these are the options, or if it did go south, this might be why, and then you can prepare for it ahead of time.
Well, here, let's just go back to this. And the other thing that I think it's important to bring up, because supply and demand, that's basically what we're looking at here when it comes to months of supply of homes. It's all about supply and demand. We've only really touched on today supply, and that's homes for sale. Demand or buyers, because I mean, every home sale that's out there. So whether you're a seller out there, you're thinking about buying your first home, or maybe you're selling and buying at the same time, maybe you're an investor just buying, whatever the case may be, it's all basically a balance between how many homes are out there and how much demand is out there on a property. And the other thing I just wanted to touch on real quick is that part of this has been the fact that there's been a ton of buyers out there. The fact that interest rates are historically low right now, and the fact that that basically with inventory being low, the amount of buyers has kept this number as it is, kept the market strong. And when we see basically 1 out of 7 people out of work, that's going to affect the amount of people who can buy. I mean, unfortunately, even if it is just a temporary unemployment, or they like we just talked about before, maybe somebody worked for a small business, that small business shut down, and now they just don't have any money, or they can't buy. Even if they change fields, that's going to stop them from buying a home in the
Right.
near future. And because of that, like that's going to affect supply and it's going to affect demand more than supply is what I'm getting at. And so that's going to also cause this number to rise. So even if this stays low, the amount of homes that are actually out there, that stays low. And, we'll just go back to here what we were looking at in terms of new listings. Even if the amount of new listings, doesn't get more than what we saw last year, if the amount of buyers are down, then that's going to hurt the market. And what we want to get at here and boil all this down to is that, like Jessica just said, we don't know the future, and yet if you have real estate needs in the next couple of years, take action now. And we're not telling you to make a move if you don't have to make a move or don't want to make a move. I think there's so much uncertainty out there that it may not be in your best interest just make a superfluous move right now because you feel like it or because you just kind of want to mess around or whatever. Like that's not what we're saying. But what we are saying is that if you have a home that you're thinking, man, we're going to outgrow this in a couple of years, or kids are getting older, and our 1,500 square foot home just ain't enough room for us. We need 2,000 plus. That you could very well be putting yourself in a position to where it's that buyer's market that we're seeing. And so reach out to us. I mean, again, we don't know what the future holds. We do know though that when inventory is down, and in fact with new listings, just look here on the right, looks like it's down basically compared to last year, down 10% compared to May of 2019.
Yeah.
And I mean, I wouldn't be surprised and that's after the spike. That's after the reopening. That's after people are starting to feel more comfortable getting out, looking at homes and all that. It's still down 10%. And so you're in an advantageous position as a homeowner if you need to sell. And, we don't know how long that'll last is what we're getting at. And we could
Yeah.
even see values start to go down if the things that we were just talking about happen. And so take advantage of this. And, the old saying, make hay while the sun shines. So
Yep. 100%.
I think that's all I had. Again, we didn't want to get into any of this stuff and get into politics because I know everybody's got opinions and that's not what we're here for. We're here to just basically say this is what we're seeing in the market and what could happen in the market based on what's happening in our world. And so, y'all, if y'all have any questions, reach out to us. You can comment below on this email. You can PM us. You can email us info@foliaproperties.com. Call or text 615-591-5665. We're here to help. We're here to inform and just here to get y'all taken care of.
Yep. Thanks,
Anything else to add?
everybody. No, I think that's it. Just like you said, make hay while the sun shines and plan for the worst and hope for the best. Those will
Exactly.
be our catchphrases going forward.
No, who knows? But all right, well, we'll sign off here again. Give us a shout if you need anything. We're here to help, and everybody stay safe. Let's take care of each other, and let's just do right by each other.
Thanks.
All right, see y'all.